Okay, hello everyone. Good day. So we are going to discuss about chapter 7 because we are done with our chapter 6. Okay, chapter 6 is about financial planning and financial analysis. So more on depreciation methods, on how to really analyze the most important ng mga factors or aspects in the financial statement because we really need to look for depreciation too. Depreciation plays a big part in our expenses. So it shall be and will always be reflected in our financial statements. So let us continue our discussion. So we are done with chapter 6. We are going to discuss about chapter 7. Okay, just a recap. I had discussed this chapter already, just the introduction last session. So this is chapter 7, financial ratios. We are going to talk about the important ratios that are going to be taken note. Okay, to be taken note, especially when it comes to financial decision making or planning. So we have our lesson roadmap for today. Here is our objectives, financial ratio, liquidity ratio, leverage ratio, profitability ratio, and activity ratio. So actually, these are the main ratios that we are going to discuss. And each ratio has many different types of calculations or solving. So we also have sub topics or sub ratios in each of these main types of ratios, whether we are going to focus on the financial analysis or ratio, how liquid our company is, our assets, what is our advantage, our leverage, how profitable would our company be given the following, okay, the following, let's say, elements. And next is activity ratio. Okay, activity ratio is more on how active or how is our progress. How much progress are we making based on the given um, mga elements or values that we have in our statement. So this is our lesson roadmap for today. So here is our objectives. So first, explain the various concepts of the firm's valuation. So we are going to explain what are those concepts that really helps in evaluating or giving value to our company. So actually ratios plays a big role in order to know how much value or worth our company or business is. Next is show the values of bond is measured, how it is measured sa atong bonds, sa atong mga again elements, especially our expenses and sales, our profit. Next is show how preference and ordinary shares are measured. So our shares, how are they measured? How profitable our company is? Mostly those ratio again shows those information or data in which it really helps in evaluating or giving value to the whole company itself. Also, those ratios again helps in making crucial financial decision in our company. So here is the term of the day. We have accumulated depreciation. So it is focused on equipment. So that's why accumulated depreciation dash equipment. So sometimes pwede po siya accumulated depreciation, buildings or assets, and so on and so forth. Anything that accumulates depreciation. So this is the amount of equipment's cost that has been allocated to depreciation expense since the time the equipment was acquired. So this one focused more on equipment. So since the day daw siya nga gibay, it already is accumulating or ga add up ang iyahang interest, ang iyang depreciation over time. So that is what it meant by accumulated depreciation. And just another um, recap or review, you only depreciate once those assets, okay, let's say equipment, buildings, or any fixed assets you have will depreciate over a long time. Okay, so those equipments that only last for let's say yung useful life, okay, useful life niya is more than a year or more than 2 years. So if possible, annual, okay, ang depreciation. So anything that is less than a year ng mga assets, they are good as kuan sila, consumables. Let's say for example, sa imong thesis. So sa imong thesis, you have let's say broiler, okay, broiler production. So sa thesis nimo imong main or nga fixed asset is what we call your um let's say imuhang cage, okay, bamboo cage. So si bamboo cage kay mo last day siya og 1 year or probably only 8 months. So 8 months naman siya maglast. Actually, there's no need for you to calculate its depreciation. Yes, pwede man siya quarterly na depreciation. So every 4 months or 3 months. Quarter is three. Okay, January, February, March. That's the first quarter. April, May, June. That's the second quarter. So matagak din siya kung quarterly. But if you say for longer, depreciation, let's say mo last lang daw siya o pila lang ka months. Again, less than a year. So there is actually no need to really depreciate it annually. Quarterly, basin pwede pa. Kay most of the time, dali ra kay maguba ang mga bamboo cages because again, their material is made of bamboo. Dali lang siya maguba kay it's either anayon or tungod sa ulan. Example lang na siya or assumption. So that's an example. Another example is imuhang mga kana bitong silig tukog. Okay. The silig tukog is actually good as consumable. Kay the more you use the silig tukog, kay maglimpyo ba kasi mong cage. So let's say sikag panilhig every day. So taga panilhig nimo kay maguba. Maguba siya, mawalaan siya og kanang tukog. So munipis siya nga manipis antud nga it's either makalbo siya or maputol. So that means good as consumable. So after siya maguba, magbay na pud ka again. So there's no need for you to depreciate that one. So that is again accumulated depreciation. So that is the term of the day. Sorry. We have financial ratio. This is our first topic. So a ratio is a mathematical yardstick that measures the relationship between duha ka figures. Two figures or of groups of figures which are related to each other and are mutually interdependent. So it can be expressed as a pure ratio, percentage, or as a rate. So a ratio is more on a mathematical yardstick. I guess familiar mo ani na siya form nga one half. Okay, one half. 1:2 or 0.5 or 50%. So it has many, okay, many forms. Most of the time, it is um, a relationship between duha ka figures, duha ka values na interdependent or related to each other. So whether it is expressed in pure ratio as in 2:1, 2:8, and so on and so forth, or percentage, 10:5. So good as 50%, or as a rate, rate are mostly kuan Japon, mga 0.5 or percent. So it can be expressed in many things. So it is not an end in itself. They are only a means to get to know the financial position of an enterprise. So they are just kuan lang sila, more siya og data or a report. So basically ratios are good as report. So kuan man siya, more dili man niya gina-change ang whole nga statement, but it only verifies, okay, the statement itself. Computing ratios that does not add any information to the available figures. Again, it does not add or alter anything in the statement. It just only expresses, okay, the truth and verifies your findings or your result. Let's say, for example, imong i-verify ang imuhang expense is to sales. Which one is bigger? Or negative ba imuhang profit, negative ba imong sales, and pila ka percent na ba imong tubo, or pila ba ka percent ang imuhang loss, or imong gain, so on and so forth. At least you can verify it through computing your ratios. only reveals the relationship in a more meaningful way, so as to enable us to draw conclusions therefrom. Again, that's the only important purpose why we need to look for financial ratios. So it only reveals how two things, okay, two values or two concepts um, interact against one another. So enable us to draw conclusions. So we can really um, verify our information. Let's say sales. Okay, sales is to expenses. So which one is much higher or bigger? Do we gain from our business based on our statement, financial statement, or are we losing? So that we can again conclude, make crucial decisions as needed. Okay, so let's continue. So we have financial ratio here or accounting ratio. So again, relative magnitude of at least two selected numerical values taken from an enterprise financial statement. So at least two selected numerical values. So for example, sales is to expense, depreciation is to assets, um, current current asset to current liabilities, and so on and so forth. So what are the relationship between two values? So ratio analysis is a method or process by which the relationship of items or group of items in the financial statements are computed and presented. So ratio analysis again is a process in which we'll know how this relationship between values are presented and computed. It is used to interpret the financial statement so that the strengths and weaknesses of a firm, its historical performance, and current financial condition can be determined. So, at the end, Marsha, good as you are going to prepare a report based on your financial statement. So we can really interpret our statement based on the ratio analysis. So we will know our strength and our weakness, unsay needed sa atoang company. Kay, again, our performance, okay, performance and productivity is always based on the financial statements, the values at the end of the day. So it's historical performance. Actually, historical performance is kuan, masya good as comparing one ratio to another. We can compare our past performance, let's say sa previous nimo nga let's say for example duhang imuhang cycle. Okay, nakay duha ka cycle sa imuhang thesis. Mo man amo sa una. I guess sa inyong karon is only one. So sa una kay duha mong cycle, we have first and second. Actually, we have comparative, okay, comparative analysis ang financial statements. We are going to compare our values and our ratios. Okay, based on let's say previous nga cycle, we have an ROI, I guess familiar mo ani, return of investment of at least 20%. So akong first cycle daw kay 20% ra daw akong nabawi. So sa second cycle is 40%. So I can assure nga okay, my business is um progressing given nga ni increase siya og at least 20% because ROI is based on the ratio analysis. At least I will know nga there is progress happening. So what if I'll continue again for another cycle? So ako iya pong i-use ang katong ratios. Okay, data from the interpreted or calculated ratios. So again, it focused on knowing, okay, knowing or um, checking your performance based on past and present. Next is current financial condition. So with financial ratios, you'll know, okay, you'll know if you are gaining, you are losing, and as to how much, okay, how much is bigger? Are your expenses or your profit? So with ratio analysis, you'll know, okay, based on the result or based on the percentage um given. So we have utility of ratios. So these are accounting ratios that are very useful in assessing the financial position and profitability of an enterprise. So these ratios are very helpful, again, useful in assessing our financial statement. I guess, gayang ani na mo karon sa inyong drafts or proposal. So actually, we can interpret, okay, our financial statement and we can have our results, okay, results and analysis using our ratios. We can use this one. Let's say asset is to um, expenses, and so on and so forth. However, its utility lies in comparison of the ratios. Again, utility sometimes is based on the comparison of one ratio. Mas nice yun siya actually. Okay. However, its utility again is based on the comparison of the two ratios. So if possible, mas nice yun siya if naka-i-compare. Okay, kay mas mabalaan man nimo. There really is progress. So you can compare it in many forms. Dili lang sa imong previous nga performance. You can compare it in many forms. And these are the following forms you can compare. So for the same enterprise, it could be over a number of years. So you can have again the same enterprise. Let's say sa imong broiler, you can continue your operation after how many years or after how many cycles. So you can compare your previous performance, previous cycle to your current cycle. So cycle 1 to cycle 2, cycle 2 to cycle 3, cycle 4 to cycle 5, and so on and so forth. So same enterprise. So mas nice yun siya, again, i-compare. Next is you can compare it in the same industry. So let's say for example, ma-compare nimo siya sa um, same industry itself. You and your let's say sa imong kauban, ikaw gabuhi mga broiler. Imo siya i-compare sa imong classmates. Let's say imong ROI is 40%. So nabalaka ka. Ala ka nga hala for cycle ra ba ito taman. Unsa nang pag-compare? Mag-ask din ko sa akong friend. Manali kasi ang friend. Hi friend, can I ask how much is your ROI sa imong cycle? Probably si friend mo yun kay 50% or 30% and so on and so forth. Kay same man mo og at least same mo og kuan production og EDP, but ang different lang sa inyo is ang innovation. So at least you can compare it with them. So you'll know whether effective ba ka, efficient ba ang imong operation compared to them. Or you would say nga, hala, 50% lagi mo, ako kay 40%. Unsay imong innovation? So at least you'll know, okay, if their innovation really is feasible or advantageous. That's for two enterprises in the same industry. So for one enterprise against the industry as a whole. So you can also compare it with an enterprise against the industry as a whole. So probably wala man kailan ma-compare. Wala, let's say, wa kay friend. Charot lang. Joke lang. Let's say, mas ganahan ka mag-compare ani sa whole industry. Nakakolek ka og data based on your RRL or review of related literature. So sa imong RRL, nakakolek kag data nga, okay, broiler production in the Philippines industry has this kuan, um, has this average, okay, average ROI of 40%. Dato nimo siya gi-compare. Nado kay review of related literature nga ang ROI daw sa average broiler farm or production here in the Philippines is okay, so that is for the whole industry as a whole. You can compare it with the data gathered by the whole industry. Let's say the broiler production industry. So you can compare it with them. So pag check din mo nga hala 40% daw ang average nga ROI sa first cycle. So it is the same with me. So actually so that means nga good akong performance. Okay, hapit-hapit lang akong ROI sa um, average. Next is for one enterprise against a predetermined standard. You can also compare it with a predetermined standard. Let's say for example, katupong industry sa broiler is nasa standard. Moingon sila nga ang standard daw sa broiler business is dapat mo dagan na kag 50%. Okay, at least 50% yun daw ang imong ROI at the first cycle. So at least you'll know nga imo ding i-check or compare with the standard. Let's say based kapon sa imong RRL. So naka-review ka ani imo gi-check ang broiler industry. Then nakita nimo ang giset nga standard. Mayroon lang 50%. Pag-check nimo sa imo nga hala, layo ra kay ko sa standard. Unsa akong kulang, unsa akong mali nga practice. Then imo din gi-review. Hala, kulang day ko ani, kulang day ko ana, and so on and so forth. So you'll know, okay? Unsa imong kulang, unsa pa imo need to improve. Okay? So that doesn't mean nga failure ka. That just mean nga need ra ka og improvement to follow or to reach the standard nga giset. And lastly, for inter-segment comparison within the same organization. So it can also be compared with your other, let's say sa imong classmate, kay same man tang organization, agribusiness. So, nag-ask na ka sa imong kauban nga broiler. Okay, sa mga broiler, same mo og answer. Then, na-curious po ka, how about mag-ask ko sa mga nagbuhi og hogs o baboy? Pila ka ilang ROI? Pag-check nimo nga, hala 60, 80% ilang ROI, dako kayo. Ang balik sa ilang kuan investment. So that means nga tsada gyud ang broiler, let's say hog production. Mas tsada di siya compared sa broiler. Let's say that's an example, okay? So you can always compare it with one another, may it be related or not. So mo nakanay sa ratio. So at least you'll know nga makahuna din ka nga okay. Hala, magbaboy kaya ako sunod. What if I'll venture to pig production to or kanang pork, yeah, pig production. Let's say for example, hog production rather. That's the term. Kaya puhon, kida ko siya ROI. So another scenario, what if bali? Pag-check nimo nga, imo kay 50% sa broiler, check nimo din sa baboy is 40 or 30% lang. Mayroon din kang hala, tsada gid yung broiler. Kaya mas dako siya ROI compared sa pig. And so on and so forth. So it always depends, okay? So at least you can compare one ratio to another. Next is these are the classification of ratio as what I had discussed in the roadmap. So the main ratios, liquidity, capital or leverage ratio, profitability, and activity ratio. So these are the main ratios we'll be discussing. So the first ratio to discuss is liquidity ratio. So what is liquidity ratio? So these analyze the short-term financial position of a firm and indicate the ability of the firm to meet its short-term commitments, current liabilities out of its short-term commitments or current assets. So liquidity, from the word itself, liquid, these are good as how liquid your company is. Unsa kadali mag-convert into cash. More on short-term financial position sa imong company. So, abilities sa imong firm to to meet ang imong mga current nga utang sa imong based imong current nga assets or current assets. Okay. So you can compare mostly those things na dali lang siya ma-convert into cash. They are also known as solvency ratio because they are again solvent, dali ra ma-solve. So as liquid as your company is. Again, unsa kadali mag-convert into cash, mangita og financing, and unsa kadali mo magbayad sa inyong mga liabilities or utang. So there are two main types of liquidity ratios. So these ratios indicate the liquidity of a firm. So these are current ratio and liquidity ratio. Current ratio or liquidity ratio, or we can also say quick ratio, or mo nang pinaka-famous actually, acid test ratio. Current ratio and acid test ratio. So these are the main two types of liquidity. So what is current ratio? So the first type of liquidity ratio. It is calculated by dividing current assets by current liabilities. So we have it here, CR. Okay, current ratio is equals to current assets over current liabilities, where conventionally a current ratio of 2:1 is considered satisfactory. So dapat daw the current ratio should be 2:1. Dapat mas dako imong asset kaysa sa imong liabilities because that this indicates nga satisfactory or appealing daw imong business. So that means it is on positive ang iyang result compared to what if bali siya 1:2. But kung 1:2, that means nga you are having losses. Okay? Dili kayo liquid ang imuhang company. Maglisod ka og bayad sa imong utang. So that's what it meant if bali siya. If mas dako imong liabilities kaysa sa imong assets. So if again bali siya 1:2, that is considered unsatisfactory. But if mas dako imong asset kaysa liabilities, that is good as satisfactory. Let's say for example, current assets. So current assets nimo is 10,000. Liabilities is 5,000. So that is good as 10,000 over 5,000. You'll have 2:1. Okay, good yapon as 2 over 1 or 2. So we can have express it as 2:1. So that means satisfactory. So what if mas dako ang imong liabilities? 10,000 ang imong assets while imong liabilities is 50,000. So 1/5. That means nga dako kay kaog utang compared sa imong cash or available nga funds na pwede nimo mabayad sa imong utang. So that means it's unsatisfactory. Negative ang imong result. That is based on current ratio. So I guess na mo'y idea what are the current assets and liabilities are. So we have current assets. So these are mostly made of, again, those assets nga dali siya ma-convert into cash. So inventories of raw materials, WIP, so work in progress, finished goods, stores, and spares. So inventories of raw materials palang daan, pwede siya mabaligya or ma-convert into cash. So these are good as current assets because they are also consumable and disposable. So dali sila magguba og madaot. WIP or work in progress are those kamulo na og process. Let's say for example, we have marinated chicken. So sa marinated chicken, atong raw material is chicken. Then the work in progress is katong cut na ang chicken into pieces. So na siya breast part, thigh part, leg part, and so on and so forth. So that is the work in progress. Kaya kabulo na siya og sort out or slice na si chicken into pieces. So that's work in progress. Next is finished goods. So after na daw siya gina-process, gibutang na siya sa pack, and may man siya og finished goods. So na kay marinated chicken in a pack. Next is store and spares. So store is where kanang imo na siyang ibutang sa imuhang warehouses. So for delivery and also for spares are katong sobra po, mara siya og sobra nimo nga mga items in case if magkulang. Okay? So good as stores and spares are the same. So these are good as current assets. Next is sundry debtors and receivables. Okay, sundry means various. Okay, various nimo nga katibitaw receivables or let's say sales. Na kay sales on credit. Need nimo paninglon. So anything nga imo receivable or anything nga need nimo paninglon are part of your current assets. Kaya once mapaningil nimo sila, you'll be using that money, okay, for your working capital. So that's sundry debtors and receivables. Next is short-term loans, deposits, and advances. So these are also an example of your current assets. So imuhang loan, deposit, and advance. Let's say for example na kay mga Okay, so those short-term loans and deposits are mostly based on your sources of finances because you already know we need to have our working capital being replenished. And with that, we need to have financing sources. So we need to have loans and advances. So those are also part of your current assets because they are already good as cash. Nakuha naman mo ang loan. You can already use those money. So also cash in hand and on bank. Okay. Cash in hand and cash on bank are part of your current assets because cash in hand, pwede na siya magasto diretso, igura ka mo po sa imong pocket. While on bank is need lang nimo siya i-withdraw. Good as i-withdraw lang nimo siya sa ATM machine. So next is we have prepaid expenses. So these expenses are mostly katong nabayaran na nimo daan. Let's say for example, prepaid nga internet connection. Okay. Prepaid nga internet connection. That means nga gabayad ka daan sa imong internet. So good as 1 month man na siya. Good, let's say for example, good as 1 month na bayaran mo siya daan. So they are also part of your current assets or nag-advance na ka og bayad. So current assets man siya kay pwede man siya ma-refund anytime or good as cash man imong use sa pagbayad ato. Next is incomes receivable. This one is also again good as kato imuhang other receivables, probably credit on sales. So if possible, paninglon yun nimo ang katong people who pay credit, okay? So i-receive yun nimo ang katong ilang bayaran. Mostly they pay through cash or probably online. So that means good as dali ra gyapon siya ma-withdraw or ma-use if cash inang pagbayad. And lastly, we have marketable investments and short-term securities. Actually, marketable investments are those good as imong mga stocks, imong bonds, imong business. Pwede nimo siya mabaligya anytime. Let's say, for example, you are going to sell your shares sa imong company or your stocks sa imong company. So, good as current asset yun siya. Kaya anytime they can be bought and they can be sold, whether cash or online. So those investment nga pwede or dali ra kay siya mabaligya are also part of current assets. Next is we have current liabilities. So current liabilities include sundry creditors or bills payable. So ganina kay assets man to. That means those are your assets ang imuhang for your working capital for you to operate your business. Okay, again, assets sa imong company. Well, next is imong liabilities, your obligations. You have, let's say, number one, sundry creditors and bills payables. So, imuhang various nimo nga creditors, so imuhang gipang utangan. You have loans probably para to finance your business. You have bills payable, like let's say sa imong mga internet, mga sa internet or sa rent, and so on and so forth. So anything na need mo bayaran or payable are part of your liabilities. Next is outstanding expenses. So good as balance. Let's say napaday kay balance, imong loan, napakay sobra. I mean, kanabitaw, outstanding expense na out of, ni over na siya sa imong budget. Okay? Wala, ni over siya sa imong budget ang kagasto due to various reasons. Let's say, for example, you nag-budget na kadaan for your internet. Then nakulangan ang imong data or ang internet. Kay prepaid man siya. So nag-add na pud ka og data. So the additional data is good as outstanding expenses. Mostly balances man siya. Next is unclaimed dividend. These are also liabilities nimo. So you already know what dividends are. Dividends are katong share, okay, part sa mga shareholders, ilahang murag bahin, okay, bahin sa shareholders. So those unclaimed dividend is need pa nimo ihatag or ibayad sa ila. Kay anytime pwede sila maningil sa imuha. So you should be ready to pay them. Okay? Ilagay ng pangitaon ang ilang unclaimed dividends. Kaya pa mo siya na-claim. Next is advances na receive. Let's say, for example, na ay down payment sa imuha. Nagpa-reserve na sila daan og pila ka number of marinated chicken. So, example daw na. So, with that na sila nag-advance sila og pay daan for reservation. Let's say, for example. So, that is good as liabilities. Kay need pa man nimo i-kuan sila, compensate sa ilang advance nga payment. Let's say, for example, nagpa-reserve sila daan og 15 ka broiler chicken. Nagbayad sila daan. So that means you have a payable or um, yes, payable sa ilaha. Naka-liabilities ilaha nga 15 chicken. So after 35 days, dapat need nimo siya ihatag sa ilaha ang ang equivalent sa amount ng ilang um, pay in advance. So that is also a current liability. Next is incomes received in advance. Again, it can also be incomes too. Ganina kay good as other advances. Let's say, for example, pay sila ahead kay para serve sila sa imong stock daan and so on and so forth. Same lang yapon ang incomes received. More on halin. Let's say, kuan ka sila dan pa reserve. Open for reservation ng imong chicken or manok. Next is provision for taxations. So you already know we pay taxes, okay? Regularly, accordingly. Mostly annual atong taxes. So these are also liabilities of our company. So actually it can be calculated every month. So anything that we work or do should be um credited sa atong tax. So atong statement kay dapat na siya less og tax if possible. So these are also part of our liabilities, obligation to pay taxes. Next is proposed dividends. So this is also your liability, current liability. So let's say for example, nag-propose na mo og dividend of at least 12% or 10%. Advance na mo og proposal. Kay nag-promise man mo sa inyong investor nga namoy 10% nga makuha at the end of this quarter or at the end of this year. So with that, your proposed dividend is already a liability. Kaya nag-promise naman ka daan. So dapat need nimo i-achieve na siya. Next is installments of loan. Installments of loan payable within 12 months. So bank overdraft and cash credit. So this is also imong loans payable, mostly 12 months daw. Overdraft or cash credit. So these are your liabilities, imong loan, especially if installment basis siya like per month. So regular siya nga liability kay monthly siya. Probably mga 12 months daw or it can be already automatic na credit sa imong card. Automatic na minus sa imong card ang imong obligations, imong loans. Those are also part of your current liabilities. Next up is we have what we call quick ratio or asset ratio. So I hope that's clear for you what current liabilities and current assets are. So mostly current liabilities and assets are less than a year, okay? So less than a year yun na sila. That's why they are called current. So the next type of liquidity ratio is we have quick ratio or asset test ratio. So this is a ratio between quick current assets and current liabilities. Alternatively, quick liabilities. So what's the difference sa current of quick? It is calculated by dividing quick current assets by current liabilities. So let's try to solve this one. So this is actually its formula. Quick ratio is equals to quick assets. Okay, in a minute. Ako siyang i-adjust para mas maklaro. Okay, just only this one. Okay, this is the formula for quick ratio or asset test ratio. We have quick ratio is equals to quick assets equals to current liabilities or quick liabilities, where conventionally a quick ratio of 1:1 is considered satisfactory. So dapat 1:1 daw ni sila. So what really are quick assets and quick liabilities? How can we identify them? So again, if possible, balance ang imong quick assets and liabilities. So dapat good as, let's say nakay nun karon, so that is quick liabilities. So dapat nakay cash nga ready to pay. Okay? So we have quick assets here. So they are current assets less prepared expenses and inventories. So that's how we can get the quick assets. So current asset daw siya, giles daw ang imuhang prepaid nga expense and inventory. So that's how you'll get quick assets. So again, CA minus prepared expenses and inventories. While quick liabilities is current liabilities less bank overdraft and income received in advance. So that's how you'll get quick liabilities too. So these are also their formula. So as simple as that. So I'll try to draw para mas clear sa inyo, ha? Okay, in a minute. So I hope you can see my screen, my whole screen. So let's try to write quick assets first. How can we get quick assets? So quick assets are actually current assets less prepaid expense plus inventory. So that is my formula. So I hope that's clear sa inyo, ha? Plus I. I'll just put I here. Inventory. INV para di siya good as interest. So that is how you'll get current assets. So good as nga na yung formula. Again, current assets less prepaid expense plus inventories. So that's for quick assets, while for quick liabilities, okay, pardon my Agi, quick liabilities, that would be current liabilities, okay, CL less bank overdraft plus incomes received. Okay, I'll put income received para dili ka siya layo. So again, that's how you'll get quick liabilities. Current liabilities less bank overdraft plus incomes received in advance. So that's how you'll get them. In a minute, I'll put FR here, liquidity ratio. Oh, so let's continue. So that is for liquidity ratio. So I hope let's try to do a recap first. Mag-recap sa ta. Para di kayo mo maglibog. So hopefully you had also taken notes. So let's try to recap. We have, okay, I'll try to use the green. Try to have liquidity, okay, ratio. So I hope you can see my screen clearly. So it has two types. We have, okay, A, we have current ratio. So we have current ratio. Again, I hope you're taking notes. So the formula is CR is equals to current assets over current liabilities. So that is its formula. So next up is letter B. Okay, tuhar man siya ka-type. We have Okay. Um, Acid test. So I'll just use this one. Actually, mas known siya as this type of ratio. So acid test ratio. Actually, mo po siya ako ma-remember. Acid test ratio or quick ratio. So let's use acid test, okay? So the formula would be this one. That would be acid test ratio or QR is equals to quick assets over quick liabilities. So that is its formula. So as simple as that. So liquidity ratios mostly talks about the current financial position sa business. So let's continue. I hope that's clear to all of you and you had taken note. So that's it for today. I'll be recording leverage ratio in the next topic. Thank you and goodbye, everyone.